markets. Femi, a pleasure to have you on Parliament West Africa.
Thank you for having me.
I'd like to start by having you give us your overview, your assessment now of how Nigeria's fixed income space has performed in the year 2019.
Well, over the year, we've seen our market started rather, quiet. We saw a bit of stability in the market. But towards the end of the year now, because of the policies that are coming into the market, we're getting the new one that came in that's buying customers from corporate customers and individual investors from investing in more option. We've seen a bullish market in this current time. So the market has been very bullish over the period of time for between November and now.
Now, aside from that, what other dynamics would you say that the investors have the most responded to in Nigeria's fixed income space this year?
Well, I would say, like I said, it's the particular policy that they responded to the most. And but the impact now is that the movement, they now moved from, normally because clients always invest in treasury bills, right? Investors invest in treasury bills normally. And because of this policy, you've seen that clients are now moving all the way from investing from treasury bills to the bonds market. Naturally, they usually shy from the market because it's kind of long tenured nature. But because of this policy right now, we've seen a bullish trend in the bond market in bond space, as in yields have dropped by about 80 basis points in the past one to 2 weeks.
So I'm seeing from your notes now, like you highlighted also, bullish sentiments across the market. Treasury bills market continued bullish run owing to high system liquidity. We'll get to talk about that. Bond market also recorded bullish sentiments which intensified during the previous trading session. To what extent would you say that investors are, I don't want to preempt you saying whether positive or negatively responding to the CBN's interventions in Nigeria's fixed income space? Are they getting the required results?
Well, I mean, the CBN has a strategy, right? One of the strategies that they want to reduce access to OMO by the corporate client, and they also want banks to actually lend. So you've seen the new policy that came out that saying that they might also increase the LDR to 70%, which means that they also want banks to actually reduce the access to the fixed income space. Alternatively, what I feel is they're trying to reduce costs for the federal government as well, because with yields dropping to this level, right? You find that use of borrowing costs for the government is actually reduced. On the other hand, for the CBN, by reducing access to OMO, you find that the banks have more liquidity to lend to the real sector, which is one of the positives that the CBN is trying to achieve in the market.
So how would you say that the current sustained levels of liquidity, to use the expression, are directly impacting market activities generally?
Oh, right. It's actually the driving force for the bullish sentiment. As of last week, we saw about liquidity get as high as about 900 billion. As of yesterday, it's opened at about 400 billion. And this week, we have a maturity about 350 billion coming into the market. So liquidity has been really robust in the market, and this has actually driven the bullish sentiment that we're seeing in the market, both in the treasury bills market and in the bond space. Currently, at the money market, yields are as low as 2-3%. I mean, this is an all-time low for years now. It's been around 14. On the average of 14-10%, but at the stage now we are around 2%. Been there for weeks now.
So I want you to help me draw a direct correlation between current levels of liquidity and the yields that are dropping within the market.
The relationship between the liquidity and the yields, right? Of course, when it's excess liquidity system, we find that there's interest in buying, all right? Clients have to find an alternative source of investment for their funds. So the impact of that liquidity is the decline in yield. Currently, like I said earlier, we've seen a decline in yield in the fixed income space, like the bond space in particular, about 80 basis points from beginning of December up until now. In the treasury market, we've seen, for the last at the last treasury bills auction, what we saw was a decline from, the previous auction was at 9%, around 9% levels. The last one was at 8.7%. The bond before that was at 10%. And for today's one that they're offering about 45 billion, we anticipate that yields might drop to about 7% at the NTB auction. So we've seen a gradual continuous decline in the yield at the NTB market. For the OMO auction, OMO bills itself, stop rate has average been at 30.3% for a while now. And at the market, secondary markets, we've seen about 12.15, 12.25 thereabout. But overall, the impact of the liquidity in the market is like there's significant decline yield by over 300 basis points at the treasury bills market. At the bonds market, we moved from about 14 at maybe like October to about 12, 11 at the moment.
So do we expect the bullish run in the market to directly impact the PMA slated for later today at the market?
Yes, the bullish one would, I mean, with the level of liquidity system, it will affect the PMA right now. So we see that yields dropping on that side. But because then for tomorrow, we have about 400 billion, maturing system, about 449 billion maturing system. That on our side will also affect the liquidity, the results. I mean, we continue to drive the bullish runs that's in the market.
So let's go to the naira-dollar disparity now. What do you reckon to be the true value of Nigeria's naira within the money market?
Our true value of naira is currently at based on the INE window, it's about 363.4 something. We've seen a depreciation from about 361 at the beginning of the month up until now. One of the factors is that we've seen exit of foreign portfolio investors from the market, caused by a couple of things. Maybe one of this is the devaluation that it's been anticipated, and I think it's the end of year that they are trying to repatriate their funds for their financial over in the other. They also the Moody's negative
revised rating for Nigeria.
Exactly, for Nigeria. So I mean, all this has impacted on the market. I'm seeing exchange rates move from about 361, depreciate from about 361 to about 363 in the market.
So what's your outlook for the market? It's a few weeks to the end of the year.
Well, for the bonds market, I anticipate that there will be continuous bullish run as far as there's no alternative source for investment for the investors and liquidity still remains in the system. We anticipate that the bullish run will continue both in the treasury bills market and the bond market. On the FX side, as far as the devaluation is still an impending danger or impending, what might happen sooner or later, right? We find out that we'll figure out the foreign portfolio investor will continually, try to exit the market in a bit to move to safety.
Many thanks to you for your time and thoughts on Power Lunch West Africa today.